So first of all, what is market geometry? So market geometry just refers to a trading style which uses geometric patterns to find us an ideal setup, okay, in the market. So it's very simple. It's very straightforward and simple. Today's pattern that we're going to be looking at is the Gartley pattern. So in our previous sessions, we covered the bat, butterfly, crab, and cipher. So in this session, we're going to be covering the Gartley pattern. And this is probably my favorite pattern of all of them, just because of the fact that I can recognize it a lot quicker than the others. I think I just got accustomed to recognizing the Gartley pattern a lot faster. So yeah, let's get straight into this. So for anybody new to the session, when we start off looking for any pattern or using the Fibonacci retracement tool, even though it's in front of us, I just want to make sure that we're all have been listening in the past sessions, etc. Where are we placing the Fibonacci tool? Let's say for example, we're looking at a bullish pattern. From which points will we be placing the tool? So is it low to high? Is it high to low? We're looking at a bullish pattern. Anybody could put that in the chat, that'd be fantastic. And there's a specific term that we're looking for as well with this movement. So with this movement, it is on the screen for you. So I don't know if anybody's noticed, but I have made the slides a lot better. I've improved them a lot more, just so we can retain the information a lot quicker. From low to high, fantastic, correct. And we're looking for a impulsive move. So that's the word that we're looking for, impulsive, okay? An impulsive move is very volatile, very fast. And in regards to time, it doesn't take long for that movement to complete itself, okay? So this morning when I placed the Fibonacci retracement tool on Euro USD, it was retracing between 23.6 and 38.2, okay? And I wanted it to do that because I was looking to catch more pips, right? The shallower the retracement, the stronger the impulsive move, okay? So for this instance, when we're looking for the Gartley pattern, again, same as the other previous patterns, we're looking for X to A. So because this is a bullish pattern, we're looking to take it from low to high, okay? Perfect, so a lot of people got that correct. So that's the first thing that we're looking for in this pattern. Now, the second part of this pattern, we are looking for point B, okay? And what we're looking for in point B is a retracement obviously from A down to B. And this retracement has to be to 61.8% of the XA move, okay? So of the XA move, meaning when we placed our Fibonacci tool, just to come back to that. Okay. Sorry, 1 second. It's not wanting to go back. Okay. So when we're placing the Fibonacci tool, it's from X to A. So that's all that means. It means 61.8% of this move, okay? So if you just look at this as 100%, so we're tracing 61.8%, okay? And with the B point, the criteria is that it should never push past 78.6%, okay? So this point here. If it does push past this point, that means the pattern is invalid, okay? So let's say, for example, let's just exclude point D, point C, and we only have point X and A. We've placed the Fibonacci tool, right? We're looking at price come down, come down, come down, right? And it comes to this point, but it doesn't close. and then the candle wick is left from here, and it comes back up, and the body of the candle closes here, that would still count, okay? And then from this move, we are then looking for point C, okay? So once point B has been met, the criteria, we are then looking for point C. Now, for this placement, we are no longer looking at the XA placement, okay? We're looking at A to B, okay? So the placement of A to B, can anybody type in the chat where we're placing the Fibonacci retracement tool? So is it from high to low, low to high? So to answer that question, it's actually from high to low. So from A to B, okay? So from high to low, okay? High to low, correct. And then what we're looking for is point C. So again, we don't have point C yet. Price is then moving from B, and it's coming up to between 38.2%. So we at least need it to push past this point, okay? But then we also do not want point C to push past A, okay? So it needs to fall between 38.2 and 88.6%. So these 2 points. And never break past this red line here, which is point A. If it does break past this line, this red line, that essentially means that, again, the pattern is not valid. So we cannot look to trade the way this pattern functions. The dynamics of this pattern, we cannot use it anymore because it's invalid, okay? So that's point C, okay? Now, once point C has formed, we are then going to look for point D, okay? And it's very crucial. Now that we've had 2 confirmations that this pattern is, about to become valid, like completely, it's about to complete the pattern so we can actually take the trade. It's very important that we have these percentages ready, okay? So to do that, we must place the Fibonacci retracement tool again, but this time we are actually not looking for a retracement, okay? Now, if you were in my last session, you would know that there's 3 types of Fibonacci placements, okay? So there's the Fibonacci, the first one being looking for a retracement, the second one being looking for an expansion, and then the third one being looking for an extension, okay? So this one is an expansion, okay? So essentially what you're doing is you're placing the Fibonacci tool from A to B, okay? But the difference being, I will show you the difference. So if I can go back, yeah, perfect. So the difference being the extension, so this is the same placement, right? It's from A to B. The only difference being is that the 100% is reversed, okay? So what I've done is I will show everybody this on a live demonstration after these slides. I've right-clicked on my Fibonacci tool. I've gone to the settings and I've clicked reverse, okay? What that essentially does is it moves the 100%, it reverses the 100% and the 0%, okay? And then you can look for the extension, which is past 100%, okay? So the expansion, sorry. Now we're looking for that to extend. Point D should extend between 127.2% and 161.8% of AB, this move here. So from A to B, okay? So as you can see here, point D is between these 2 zones, which means that it has become a valid pattern, okay? Now, one thing to keep in mind is it's all good and well, us going through a a structured pattern that's already developed. However, when you're looking at price action, you're looking at candles move, you're looking at, you could potentially have news that's about to drop. You want the candle. First of all, we don't trade red news. Second of all, you want the candle to close between this area, okay, between these percentages. If the candle closes above this percentage, or below, should I say, it makes the pattern invalid. So you want to make sure that you're not getting into the trade too early, okay? You want to make sure the pattern is formed first. So once it is formed, then we can look to get into the trade, okay? So this is the second criteria. I just wanted to include this. Sorry. So the second criteria, this is the second criteria for point D, okay? So I'm just going to bring it back. So for point D, now this is a retracement. So we're moving back to retracements, okay? Again, the placement is from X to A, and then we're looking for a price to retrace to 70, past 78.6%, okay? So it's past that point. So they're the two criteria for point D. So once this has been completed, so this is just for everybody, so everybody can see the completion of the pattern. Once it is completed, we need to know the points of entry, the stop loss, the take profit 1 and 2, okay? So our entry point is always point D, okay? One thing that you can use as well, that I use quite a lot, is round numbers. So, not some random numbers that you'd enter on. So for example, you could look to get in, I will go through, actually, it'll be a lot easier. I will go through round numbers on the live analysis, the live demonstration. And then for the stop loss, it's always under X, point X. You always put your stop loss under that. And then for the take profit 1, you can place that at C. And then take profit 2, you can place that at A, okay? My advice for beginners, anybody starting out trading, would be just to place take profit 2, and not to complicate things. Once you get more comfortable with taking trades and modifying your trades, you can then start to look for take profit 2. What you can do is once price reaches take profit 1, you can then modify to take profit 2, and you can push your stop loss into profit, okay? That's one technique that can be used for that. Perfect. Right, so let's move into the live demonstration now. So as you can see here, this is the pattern that we're going to look at, the live pattern, and it has actually played out very well. It's hit take profit 1 here and take profit 2 here, okay? So these patterns, they work really well. And so if we, for example, were to look at this trade, if we place the Fibonacci tool, so if we place it from here to here, and then we look for an entry point, for example, we could enter, so like I was mentioning, round numbers. So we want to enter at point D. So we could potentially look at entering at 144.800, okay? Or we could look at, so yeah, so more than likely we would look at 144.800. And then we can also look at placing our stop loss as well. So let's look at a long position from 800, roughly about there. And then stop loss, remember, goes under X, there, and then take profit 1, you could place right there, okay? So then, for example, if you wanted, so for the take profit, again, I would look for a round number as well. So I could bring that down to, or bring it to like 146,500, okay? So again, that's sort of like a rounded number that you could look for. And then let's say, for example, you're comfortable with taking TP2 as well. What you can then do is, if price gets up to this point here, you could then modify your stop loss to point A, okay? Then you can move your stop loss into profit, right? So you could move the stop loss into profit, which means that, you know, you can move it to break even, you could move it deep in profits, so you could place it just under a resistance zone. That way, you have some sort of you know, barrier in the way of the price and the stop loss. That way, if it comes to the barrier, it has a good chance of it, you know, rejecting and hitting TP2. So it's a very simple sort of technique to use. But again, if you're new and if you're just starting out, I would recommend, you know, just sticking to TP1. Okay, so just to make sure everybody was listening, when we start off with the pattern, where are we looking? Which points are we placing our Fibonacci retracement tool? Does anybody remember? So we're looking for an impulsive move first, but how will we be placing it? If we're looking for a bullish, if we're on a bullish trend, and we're looking for a bullish pattern, so from X, we start off at X, correct? And we place it all the way up so we go from low to high. And then, just so I know that everybody's listening again, point B, where should point B be retracing to? Where are we looking for point B to retrace to? If anybody could type those percentages in the chat, that'd be fantastic. So there's two particular percentages. So once we've placed the Fibonacci retracement tool from X to A, B will then the price will then retrace to form point B, but which particular percentages should it fall between? So we've got 61.8% so far, but there's also another percentage that it needs to fall between in order to be valid, right? So if it pushes back past 61.8, it makes the trade invalid. So the other percentage is 38.2%, okay? So these two zones here. So I'm actually going to draw up the zone to make it a bit easier for everyone. So let's have a look. Be under this, yeah, right. So we need the price to fall between 38.2 and 61.8. So this is point B, right? So this green zone right here, if price goes above or below this green zone, it means that the pattern is invalid. Okay, perfect. So the second step, we're looking for price to go from point B and form point C, right? So for this placement, for the Fibonacci tool, just so I know everybody's listening, where are we placing, at which 2 points are we placing the Fibonacci tool? Because we need to find point C, but we need to delete this Fibonacci tool and we need to place it elsewhere. Which 2 points are we going to be placing the tool? Okay, so to find point C, we're going to be placing it from A to B. Okay, from A to B. So just trying to get it perfect. Right. So for point C, can anybody tell me the percentages for point C? So where must it fall between? And the second part, which percentage can it not push past? Or which point? So I'm actually going to draw up a zone again, so everybody can see this. So it's 38.2%, okay, and 88.6%, okay. So that's the zone for point C, okay. So we can see that point B is in the green zone and point C is in the green zone. Now, here's an easy one for everyone. Where must price not push past in order for C to be valid? So price must not push past point A. Okay, so this point, essentially 100%. If price pushes past point A, it makes C invalid. Okay, perfect. So now all we're doing is we're looking for point A to be formed. So now point C has already been formed. We're looking for point D to be formed. Okay. However, we need to replace the Fibonacci retracement tool. So can anybody tell me which type of Fibonacci placement are we making? So which type? So remember, there's 3 types. We have a retracement, an expansion, an extension. So which one are we looking for? So we're actually looking at the expansion, okay? Expansion. Perfect. So you got it right, Kuldeep. You got that one correct. So for the expansion, again, where are we placing the Fibonacci tool to find the expansion of point D? So the key word is expansion, okay? So it's not a retracement of a certain percentage. We're looking for the expansion for point D. So where can we place our Fibonacci tool? From which 2 points? So we're actually placing it from A to B, okay? Now, can anybody tell me what we are doing? Currently, it's in the mode of a retracement. How do we change this to find an expansion? Can anybody tell me how to change this? What do we need to do to the tool to look for an expansion? So we need to reverse the tool, okay? So what we're going to do, reverse it, perfect. So what we're going to do is we're going to click on the settings tool. We're going to come down here. We're going to click reverse. Now I'll show you what that does. So if I do this, so you see up here, the expansion percentages, the percentages past 100% essentially, they're on this side. That's because we're looking for certain reversals, okay, or retracement, should I say. Instead of a retracement, we're looking for an expansion, okay? Can anybody tell me the percentage or the two percentages, the green zone for point D? Can anybody tell me? So I'm just going to drag it across a little bit more so everybody can see. So remember, point D is here, is marked at this point. Can anybody tell me the percentages? Remember how I mentioned that 127.2, that's the first one. Yeah, correct. You got that right. And then there's a second percentage that we need it to fall between 161.8. Yeah, correct. They're the two percentages. So let me draw up that green zone. So right here. And then also keep in mind what I said about point B, okay? So remember how I stated that price can form a wick outside of the percentages, okay? But in order for us to enter, we need the candle body to close within our green zone, our percentages. So what price did is the candle actually pushed out below our green zone, but then before it closed, it actually retraced back and it closed within the green zone. And once this happens, we can then look to take this trade, okay? So can anybody tell me the second criteria for point D? It's might be a bit of a difficult question to answer because we didn't really cover it that well, or in depth, should I say. If anybody can answer that question, you get bonus points. So the second criteria for point D, this is the last criteria before we enter this trade. And I'll give you a hint. It has nothing to do with extensions or expansions. Can anybody tell me? Okay, I'm going to say it. So what we're doing, we're going to delete this expansion. And instead of the expansion, we're going to place the Fibonacci tool to find a retracement. Okay. So we're placing it from X to A. Can anybody tell me the percentage that we're looking for price to push past for point D? I'm going to change that back. So price must push past 78.6%. Okay. And then we can enter the trade. Okay. Perfect. It sounds like a lot of work just to find a pattern. However, it does get easier as time goes on. So for example, you could have this already placed on your chart, and then you can look to place this percentage as well. And what you can actually do is, if we do that, so we can draw up the zones here. So we can actually just draw up the zones itself. So we can place the tool like we've done today, and we can just draw up the green zone, and then we can just delete the tool, okay? That's a very simple way to do things. So place the tool, draw up your zones. If price goes out of these zones, it means that the pattern's not valid. If price sticks to these zones, fantastic. We know that the price is valid, right? We know that B is valid, C is valid, and then we're just looking for price, the candles to close within this green zone. Once price closes in this green zone, we can then look to take the trade, right? Okay, very easy question for everyone. Where are we entering the trade? Which point? D, fantastic. Well done. Awesome, amazing. Most important bit, because we always need to do this. If we're not doing this, then you need to stop trading. where are we placing our stop loss? At which, past which point? Past point X. Past X. Perfect. So let's do it together. Let's do this together. Under X. Amazing. You got that right. So entering at this point, at point D, green for entry, red for stop loss. Stop loss will go under point X. So red for stop loss. And then my next question, where are we placing TP1? Point C. Yep, so the TP1 is point C. And then where are we placing TP2? Point A. Fantastic. Amazing. Perfect. So now, let's say, for example, you are a... actually, I'm going to ask another question with regards to entry points. Is there any specific price that we're looking to enter this trade? I know it's at point A. That's great. You know, with the criterias, we've met every single criteria. Is there any particular price that anyone would enter this trade? So just looking at these levels here. So I'm just going to delete this actually, so it's easier for everyone to see. So as you can see here, there's certain levels on the side. There's certain numbers that you can see. Can anybody, does anybody remember what I said? So we're looking to enter a whole number. Okay, so let me quickly just pop those in. So for example, you could do 800 right there. You could do, for example, let's say point D, we could do 600. So we want to enter at, what is this called? What are we doing? What are we looking for when we're entering? Because we're not entering at any random number, right? What are we looking for specifically? There's a particular word. A whole number. So we're looking for a round number, right? We're looking for a round number. Okay. Perfect. So that's fine. So if you take notes on that, we're looking to enter at round numbers, right? We're not just looking to place it anywhere. That way, let's say, for example, if you were to place, if you were to enter at 144,600, and we had a 30 pip stop loss. So let's try this. That would be your round numbers. So you've entered at 144,600. You place your stop loss at 144,300. Okay. You can also round up these take profit levels. Okay. You can round it to 500 to keep things simple. And you can round this one. Where would you round up take profit to? Can anybody say where they would round it up? There's no right or wrong answer, but can anybody say where they would round it up to? So I personally, I would actually round it up to 147.400. You could do 400. You could do 300. So I would do 400, okay, because it's closer to that that level. And then again, if we're new to trading, which one of these two are we going to place? So we're placing a take profit and we're new to trading. Which one will we place? TP1, fantastic. You're correct. So we're always placing TP1 as a new trader. If you're not experienced in the market and you're placing trades and you're going away, let's say if you've placed TP2, price could come up to TP1 and fall back down, right? Whereas if we're new to the market and we place only TP1, there's a better chance of it hitting TP1 and closing than it is coming up to TP2 and wicking it and not actually closing and dropping back down and hitting your stop loss, right? So what we want to do, once we've got the experience and we feel comfortable with placing the trades, what we want to do is we want to wait for price to come up to TP1. Once it reaches TP1, we could then modify that to TP2. We could then look to take partials and move our stop loss into profit, well into profits. Okay. Perfect. So just before we end the session today, how has everybody found this? I just want some feedback in the chat. How has everybody found the session today? Have we been taking notes? Is there anything else that you'd like me to cover in future sessions? What I'm going to do for the next 10 minutes is I'm going to look on Manara, but the feedback would be appreciated. I'm just going to grab a sip of water really quickly, and then we're going to continue for the next 10 minutes on a live chat, okay? So it won't be a second, just bear with me one moment. Okay, perfect. So I'm just going to have a look at the chat. So the session is going to be uploaded to the YouTube channel, so you don't need to worry about that. Practice makes perfect, honestly. All you need to practice for now, if you're starting out, is placing the tool. You know, if you can place the tool, everything else, the price will do the rest for you, okay? Just practice placing the tool. That's fine. Was anybody taking notes? That'd be great. So Goldbus, so I've posted the link to the Telegram channel. If you join the Telegram channel, what I will do is I will place the recording in there. Perfect. So let's continue on to Manara for the last 10 minutes, okay? So when we come into Manara, it could feel quite alien because there's so much going on Manara. When I first seen Manara, it was, you know, it's crazy. But once you get used to it, all you need to look at is your stop loss, your entry, your target 1 and 2. Okay, that's all you need to look at. I was going to suggest this trade idea. However, because the overall trend of Euro JPY, of EJ, is an upward trend, this pattern right here is a sell, okay? And we don't trade against the trend, okay? So let's demonstrate this. Let's look at Euro JPY, okay? So let's go to Euro JPY. Under. Okay, so So that's the bat pattern. So let's turn on bat patterns. Let's turn off the rest. Okay. Perfect. So this is a good demonstration actually. So why is all that coming back? I just turn these off. Sorry guys, just bear with me 1 second. Okay, perfect. So this is a good demonstration. We're looking at an upward trending sort of market. So we have a little bit of consolidation here, and then we have a breakout here, and then it comes back into the zone of consolidation, but then it drops, and then it starts trending upwards, and then it trends down, and now we're in the upward trend. So we don't really want to be taking a sell trade on an upward trend, okay? The good thing about Manara is that it does have support and resistance zones as well. So, for example, how would we make this a high probability trade? So can anybody put their sort of experience in the chat and sort of, you know, if they use their knowledge of trading, how can we make this an you know, to build up the percentage of this actually working out? GBP, GPY, GJ. So we're actually at a resistance here. So this point here is a resistance. And it's a previous support here, support level, if you can see at this point here. So the good thing about this is it has a good chance of rejecting off of this level, okay? We can look at drawing up a point of interest zone using this level also. So a point of interest for me would be at a turning point. So for example, before the impulsive move downwards, we would look for the candle prior to the impulsive move. So let's take, for example, if I can find the Fibonacci, not the Fibonacci, the parallel channel, which I always lose in all of this. I should really put it under favorites. Parallel channel, there it is. So if we come to X here and replace this here, and then we place it, we cover the whole candle. So we're looking at this green candle here. So this bullish candle before the impulsive move down. And then what will we be looking for here? At this point, we're going to be looking at a lower time frame entry, okay? So what we're going to be looking when we're looking at this price action is we want, ideally what we want to happen is a change of character, okay? So if we look at these levels, so I've seen something here. However, it's not happened in our zone, our POI zone, point of interest. What we want to happen is something similar to what happened here. Okay, so price has initially has broken the previous high. Okay, at this point. and then it has broken the previous low. So this is the previous low at this point here. So it's broken these two zones, which is a change of character. Okay, so instead of it happening at this point, we ideally want it to happen in this area here, in this zone. So okay. So what everybody can do is, if we of course all have Monara. If you have access to it on your phone or laptop, what you can do is draw up this zone, and you can watch this zone and see what happens to price action in this zone. Okay, because essentially what you want to happen is you want price to so let's say, for example, it came to this point and then it came down to this point, back down, but then price action then broke that previous high. Okay, so this previous high here, and then broke the low, which is here. Okay, and then price action came back to this high here, and then what will happen, we can enter at this point, we can enter at this point. So there's 3 points of entry, okay, that we can have. I'm just going to quickly show everyone. This is more of a kind of an advanced sort of training. So this point we can enter at. We can enter at this point here. This is like a sniper entry. Or we could enter at this point here. Okay, any of these points. So this is called a so this entry right here is an MB entry. This is a QM entry, and this is an LB entry. Okay, in a future session, I'll go into what all of this means, but essentially they're 3 different entry zones. So there's QM, there's QM. Sorry, no, that's not. So that's MB. Okay, so MB, QM, and LB. Okay, I always get them mixed up. So they're 3 different entry zones. So if we enter at, let's say, the LB zone, we could then look to take price all the way down. And then again, we are then referencing back to our higher time frame pattern. What a mess. Okay, so we're referencing this pattern. What we're doing is TP1 again here, and then TP2 at point A. I appreciate everybody joining today. I know it has been a bit of a longer session than usual. I do appreciate everybody taking the time out to join me on this this evening. It is quite a warm evening, but again, I appreciate you all joining. I hope everyone's got value from the session. If everybody got if anybody got any value from the session, please feel free to drop some fire in the chat. That would be amazing, so I can see that everybody's learning, and I can keep doing these sessions also. Perfect, no problem. I appreciate that. I appreciate that. Thank you, Kuldeep. Thank you, Masnoon, and thank you, Dennis Pallavi, as well. I appreciate you guys for joining, and everybody else in the chat as well. I appreciate you all for joining. If you didn't catch the session, again, I'll post the recording later. But yeah, I appreciate everyone, and yeah, I'll see you in the next session.